Ja, wunderschönen guten Morgen und guten Nachmittag zu euch. Very exciting to have Dan Niles back on board here in my YouTube channel. Dan, good to see you.
Good to see you too, Markus.
Dan Niles ist Hedgefonds-Manager mittlerweile in Florida. Er ist umgezogen. You moved to the Sunshine State, to Florida. The last couple of weeks. Er war in den End-90er Jahren unter den Koryphäen an der Wall Street, was die Tech-Analysten betrifft. Damals mit Henry Bludgett und Mary Meeker, wer in den End-90er Jahren schon mit dabei war. Und er war im Gegensatz zu den beiden anderen derjenige, der sehr früh oder rechtzeitig vielmehr vor dem Platzen der damaligen Tech-Bubble gewarnt hat. Dan ist bei uns jetzt oft schon Gast gewesen in den letzten Wochen. How long have you been in the hedge fund business now, Dan?
20 years.
20 Jahre. Yeah. Man, time runs.
Huh?
Time flies.
Yeah, I've been on Wall Street since 1990. I started off my career as an investment banker for 4 years and was a Wall Street analyst, sell-side analyst for a decade, and then I've been doing this for the last one.
Schon lange mit dabei, seit 20 Jahren Hedgefonds-Manager, und ich hatte ihn unlängst ja besucht in Seattle damals noch, um mit ihm über die Tech-Werte zu sprechen. Wir sind jetzt quasi 2/3 durch bei der Tech-Saison, haben jetzt noch die Ergebnisse von Nvidia, und ich möchte die Gelegenheit nutzen, mit ihm und mit euch mal in die bisher eingegangenen Ergebnisse einzugehen. Ne? Ab und zu werde ich für euch mit übersetzen. Ne? So stick with me. Dan, let's start with the Apple earnings. And what's your take looking at the stock reaction and looking at the numbers?
Well, my take is kind of the way it was before, which is from the day they report earnings, regardless of what the stock does today, that between now and their June 10th Worldwide Developers Conference, where they're going to talk about their AI efforts, I think the stock will go up. And if you look at Apple over a long period of time, the stock tends to run up into product launches, and then you know, that's the hope, and then you deal with the reality afterwards. And so that's how I look at the period between now and then. In terms of the earnings themselves, if you look at them, they weren't great. They're only great relative to the fact that numbers came down so much before that. So Apple's revenues are down 4% year over year. And if you look at it, not versus expectations, which have been dropping all quarter, but you look at it relative to the rest of technology and you compare it to the Magnificent Seven. Magnificent Seven revenues year over year, on average, which includes Apple, which drags it down, were up 42%. Even if you take out NVIDIA, they were up 10% year over year. If you say, well, you know, that's only a year, you want to look at it over 3 years, you know, Apple's revenues over 3 years are up a whopping 1%. And again, for the Magnificent Seven, it's up 86%. And even if you take out NVIDIA, the average, which includes Apple, is up 45. And you go back to 5 years and say, hey, take the March quarter back before COVID really got surging back in 2019. And you look back forward to this, Apple's revenues are up 56%, and on average, the rest of them is up 275%, and even without NVIDIA, it's still up 155. So no matter how you want to look at this, Apple's growth has been stagnating for 1, 3, 5 years, and these results are just a continuation of that. Now, granted, they're saying, hey, we're going to grow low single digits in the June quarter, but is that really a great growth rate? Especially when you're trading at a 26 PE, and actually it's now at 28 PE, and the S&P, you can buy it at a 21 PE. So that's the issue I have with Apple right now. But that's a long-term issue. In the short term, obviously, things look, you know, we're just playing this for the worldwide developers.
You're already getting pinged from Tim Cook, Dan. He's probably watching this, so be careful what you say.
I have this on airplane mode, so I don't even know how that came through.
If it's an Apple, Tim Cook knows his ways to you.
Probably true.
Let me briefly touch on this. Also in anderen Worten, wir haben im Prinzip kein Wachstum bei Apple. Und eine Story, die wir schon seit 5 Jahren sehen, gerade mal ein bisschen mehr als 50% in 5 Jahren, während Microsoft über 100% Wachstum hatte. Now the key question for me is, Dan, looking back a couple of years, remembering Steve Ballmer's crazy ass dance on stage and trying to hype up Microsoft and send the message that, yes, Microsoft, there is the opportunity of growth and we can make it happen. And back then, people had a very similar feeling today in regards to today's feeling with Apple. Like it's a dinosaur, their growth is stagnant, they're not going to be able to turn corners, and Microsoft did it. How big are the chances that Apple can actually turn the corner and create more growth than many hope or realize?
Well, I would take issue with your question because I don't think that's how people view Apple at all. Because if you listen to most of the commentary, it's very bullish on Apple, right? People go, oh, they have this services business, and we're going to get this big AI, we're going to put AIs on smartphones, and you're going to end up with this big growth. But if you think about it, you've had similar types of stories over the last several years, and you haven't really gotten the growth. So I think there's a lot of optimism built into it, and the way I would look at it is if you look at the multiple, that kind of tells you what you need to know. Or think about last year. Last year, Apple stock was up 48%. The EPS for the December quarter, which they reported 90 days ago, relative to where it was a year before that, came down 10% over the course of last year, and the stock was up 48%. So there's a lot of optimism built into this name. And so I would disagree with your thing that people view it as a no-growth company, because I don't think that's how people view it at all. But to answer your question, well, can they get back to growth? My thing is that if you put AI on your phones, they're just catching up to what a lot of the other smartphone vendors have already done. So some of you may remember the Super Bowl ad where it showed you could circle, it's called circle to search, where if you're on an Android phone, you can actually circle an image and it'll go out and tell you what that image is. And so a lot of the leading smartphone manufacturers on the Android operating system already have AI built into their phones. So this just gets Apple caught up to where a lot of those guys are. And then the final piece is foldable phones as a category seem to be doing quite well, and Apple doesn't have one of those either. So we'll see how this plays out. I think the positive, if you like Apple, is that I'm sure investors will want to believe it's going to be great, just like they wanted to believe the Vision Pro was going to be great. And so you'll get that little bit of that hope trade, but then eventually they're going to actually have to go out and sell the phones, and then we'll see how this all shakes out, because I hate to tell people, but Huawei's not going away. The competition is not going away, and they're doing pretty well, and that's the biggest issue. And then this other refrain I hear, which is, well, they're going to expand into India. It sounds good on the surface, but if you think about it, India's per capita GDP is 3,000. You're trying to sell a $1,000 iPhone into it. To put it in perspective, China's at 13,000, and the only market that grew for Apple in the most recent quarter, actually Europe was up 0.7%, so I suppose you could call that growth, but is the US, but the per person GDP per head in the United States is in the high 80,000 range. So this, going to India and saying that's where you're going to get it, at 3,000, yeah, we'll see how well that works, other than obviously the high earners, where those people will adopt it.
Let's briefly stick with China. China is the second most important market for Apple after the United States. Sales were down, but they were not down as much as feared. Now you have this debate going on Wall Street. Some are saying it's just a cyclical downturn. Others are saying it's structural, because look at the first quarter. Huawei increased their sales almost 70%, while iPhone sales actually tanked. What's your take on that? Are we seeing a structural shift in China, or are we seeing a cyclical shift, or maybe a combination of both?
No, I mean, it's a structural shift, because what people tend to forget is back in 2019, before the U.S. put sanctions on Huawei, Huawei was fighting for #1 global market share with Samsung. Then the sanctions got put into place, and their market share went from the high teens into the single digits. And then September of last year, we've been talking about this ever since Huawei came out with their new flagship phone, but that was a huge surprise because they did it without any US chips. And then they started taking back massive market share. And to your point, Huawei grew, but the entire smartphone market in China grew. So this isn't a cyclical issue with China. This is a structural competition issue where somebody who got locked out of the market, who was a massive player in the global market, is now back. And that's the problem.
You know, it's interesting listening to you. You sound very skeptic on the mid to long term for Apple. The valuation is also relatively high, considering how low growth rates are. Yet it's your second biggest position in your hedge fund. How does this...
Yeah, you have to remember there's the short term and the long term, and this is all I do for a living. So this is my full-time job, and the thing you realize is you end up with statistically good trading opportunities from time to time, and certain companies exhibit certain patterns that repeat. And Apple is one of those where I've gone back and looked at every single product launch since, going back to the original iPhone, and the stock statistically outperforms in the couple of months leading up to that, and specifically the month before that product launch, and then it tends to, underperform for a period of time after that. And so it's a very consistent pattern, and so there's nothing wrong with that. And don't forget, I have positions that I like, I have positions that I don't, and so you just try to match those up, and you try to take advantage of high probability trades when you get them. And so that's how it functions within the portfolio of names that I currently own, is just trying to have that balance. And the good news is you can hedge out the risks within that. But if for some reason I'm wrong, and Apple is somehow, this does spur a huge upgrade cycle, then I already own the name. And we'll get more and more data points as we go. But that's what people want to believe. And so the goal is to make money. It's not to be intellectually right. The goal is to make money. And so if you can make money in the short term, you should.
Wir haben hier eine kleine Rückkopplung. Ne? I can hear myself. I think that I must be on a speaker on your end somewhere, right? Is that possible?
Oh, you can hear yourself?
Yeah, I can hear myself. But that's okay. I'm just going to continue. I love hearing myself,
Oh, sorry about that. No,
That's all right, no worries.
Yeah.
Maybe an interesting question from a viewer. Kurze Frage, wir haben hier eine Rückkopplung, aber ich will die Frage hier mit einbauen von Abdullah. He's basically saying, well, Apple is developing their own chips. Is there the possibility that they will end up with an AI chip using their own huge ecosystem now to monetize that, and they'll surprise markets by basically increasing profits by way of utilizing their own chip technology?
Well, all I know is they better come up with their own technology, or they're going to have a major problem losing even more market share going forward. So that'll just get them even with the capabilities on other phones.
Let's talk about the other big ones. You are, I don't know if you still have a big position in it, but you nailed Meta and the rise of the stock, while most everyone else was still bearish. Now we just had Meta earnings. They are investing more than Wall Street expected, a bit more. So does Google and so does Microsoft, but the reaction was quite different. Wall Street doesn't like the idea of Meta investing that much in the metaverse. Why do you think the reaction was so different to the increased capital spending? And why do you think the stock reacted so negatively to the earnings?
Well, it all comes down to expectations. The stock had a monster year last year. It almost tripled. And it had a great year this year. And so expectations were high going into it. But if you look at Meta versus Microsoft versus Google and the forward numbers, for all three companies, the forward revenues estimates went down a little bit. So it really isn't a whole lot different, the results between the three of them. It's just Meta happened to be first. And so that's why it went down, but it's still obviously up very nicely for the year. It's up 27%, way outpacing the S&P or NASDAQ. And the thing with Meta that I look at that makes me very confident is regardless of whether we get a recession or high inflation or low inflation or whatever, the one thing you know for certain is we're going to get a presidential election and we're going to get the Olympics. And you know this is going to be the most contentious presidential election we've ever had, and there's going to be an enormous amount of money spent in the media and social media to try to get people to vote for them. And so that's something that Meta is going to massively benefit from, never mind the issues going on with TikTok, which also benefits them. So, and unlike with Apple, where it's really not growing, Meta's growth is very good, and you're getting it at a reasonable multiple, where you're getting it at about a 22 PE, and the market's right at 21, except in Meta's case, the revenues are growing high teens versus the S&P, where the revenues are growing in the mid-single digits.
And of course, Meta always has the tool, if needed, they can reduce investment to basically help the profit base, right?
Absolutely. And that was the big reason we were so bullish on the stock back in October of 2022. And we're out publicly stating when the stock was in the low 90s, because we're like, unless you think Mark Zuckerberg is stupid, he can cut back the spending anytime he wants. And so that gives you a big cushion and margin of safety. And guess what? After he gave that guidance of we're going to spend an ungodly amount of money, the stock tanked. You had huge issues with the employees because the stock's getting killed. And he came back out and said, oh, you know what, we're going to cut that back. And then the stock started to rally and hasn't looked back. And so, you're in a similar situation right now. The one difference is that Meta's top line's growing very well. The bottom line's growing very well. And so they're generating enough cash to be able to spend from a position of strength. And I think that's a good thing for them. And much to your earlier discussion around the spending that all these companies are doing around AI, Meta is actually using their spending on AI to improve their own revenues, right? They're not necessarily a platform for other people. That's not how they're looking to make money. They're looking to use AI to help monetize the ads that are shown, and then to help engagement by showing you videos and recommending videos that you might actually want to watch. And so they're using AI incredibly well internally at the company.
Also die Olympischen Spiele, die Präsidentschaftswahlen, die wirken sich hier im zweiten Halbjahr natürlich positiv aus auf das Wachstum, und Mark Zuckerberg kann jederzeit die Investitionen reduzieren, falls das notwendig sein sollte. Let's build a bridge to Google, because Olympics and the presidential elections are also two things that could drive revenues with Google. Yet the situation with Google seems to be quite torn. There are many opposing opinions. The fear that AI will reduce the search income. At the same time, the possibility that Google might be better positioned in AI than most anybody realizes, and Google might turn out to be the big winner in AI next to Meta and Microsoft. What's your take on Google?
Well, what is their cash cow engine? It's search, right? Everybody always says it like a verb, right? Go Google that. They have 93% share in search. So the question I think you have to ask yourself from a longer term basis is, with all of this money that all of these other companies are spending on AI, so OpenAI, Perplexity, Mistral in Europe, etc., do you think that Microsoft can hold 93% share? I think it's going to be pretty difficult if you believe those other companies are going to do it. And so that's the issue I have with Google from a longer term basis in search. And then when you look at their advertising business, let's say YouTube, you've got Amazon that just started showing ads on their Prime Video. Obviously, you have Disney pushing ads. You've got a lot of the video services pushing ads, and not to mention TikTok. And so that's also taking away some ad dollar revenues from YouTube. Now, to your point, Google has 9 products with over 1 billion users each. They have more training data than anyone on the planet. So will they be able to put out a great product if they choose to do it? Yes, but as you know, there have been all sorts of issues with, political issues within the company that have prevented them from putting out accurate answers when you do use their AI product. And so that's another thing you have to think about is, will they put out the best product humanly possible, despite some of the things going on politically. So, but I just come back to, I'm a math person, and I go, at 93% share, do you think Microsoft, with being at 3% share, can eat into some of that? I have to believe the answer is yes.
Mm-hmm, mm-hmm. That's a very good point. Yeah. Yet, if you look at the Google numbers that were released last week, we did see a lot higher growth in many segments, including YouTube, including search. So your idea is playing more into a long-term scenario, looking at the company, right?
Yeah. No. I mean, this is going to take years to play out over time, and you have to need to think about it holistically. If you think somehow Google holds that kind of share, then obviously that's going to be a negative for things like OpenAI or Microsoft, et cetera. So you have to kind of think of that together. But for me, I look at all of these other companies as it's all upside for them, because they have so little share to begin with, because the number one guy's got 93% share. And so for them to eat into that, it's not hard to imagine. And so that's definitely, to your point, Google's the one I'm the most torn on, because I think between now and the elections, they're going to get a lot of ad dollars flowing into them, and that's going to benefit them. The question becomes, once that artificial, and don't forget the Olympics, but once that goes away and you have another year of all these other companies investing on their own AI architectures, they have to make a living as well, and they're going to make a living selling ads and doing other things on top of licenses and everything else they're doing. So on the margin, you got to believe that has some impact. The other thing is, Google's not an enterprise company, which people forget. They're more of a consumer-facing company. Microsoft is an enterprise company, and I think if you look at Amazon, Microsoft, and Google, my opinion is that they're probably the best positioned from a corporate side to do well, because they're very enterprise-facing, and obviously Amazon's very consumer-facing as well.
That's super interesting, actually. If we can drill down a bit more, why this is so important and why this drives the opportunity for Microsoft. The earnings reaction also was very positive. The stock rallied after the earnings release. I know you're a big Microsoft fan. Where do you think are the opportunities going forward? And I'm wondering also a bit, looking at the second half of this year, aren't the comparisons to last year, the year-on-year comparisons, getting increasingly hard for companies like Microsoft to beat?
Yeah. So to be very, very clear, the three names that I like the best are Meta, Amazon, and NVIDIA. Microsoft is sort of the fourth because of what you just talked about, which is, if you look at the numbers, and we've talked about this before, much like with Apple, Microsoft at least is growing revenues mid-teens, but the multiple is at 33 times. And if you think about, well, how do I want to play AI? You can look at NVIDIA, and NVIDIA is trading at 38 times, so Microsoft's at 33 times, but they're growing revenues at 100%. So from my perspective, Microsoft, out of the four that we just talked about, or I call them the Fantastic Four, they're the one that I am least optimistic on, because as much as their growth is being helped by AI, other portions of their business, it's coming out of spending on other parts. So, and the multiple, I'm a big valuation person, because my belief is that gives you a margin of safety, because something can always go wrong with your investment thesis, right? And so you need to have a little bit of margin of safety, and the lower the multiple is, the more margin of safety you have. And I look at multiples relative to growth rates. So that's kind of, where I would put Microsoft as, and then, we've talked about Google, obviously already. But so I think you bring up very good points on Microsoft, Marcus, which is why I sort of say, you've got the three core names, and then you have Microsoft right after that, because I do think relative to Amazon and Google, they have a better product for AI for companies that want to go ahead and build AI applications. I think Microsoft's the better choice for enterprise to do that.
Let's dive into the cloud area. We're seeing more cloud growth across the board, actually. We saw it at Google. We saw it at Microsoft. We're seeing it at Amazon. AWS, Amazon Web Services, is growing faster as well. The interesting part, other than AWS gaining momentum, seems to be that the operating income across the board seems to be gaining momentum, and margin seems to be increasing, including the advertising sales at Amazon. Is Amazon becoming a bigger story than just AWS?
It's always been a bigger story than AWS. The problem is they've never made any money on the other stuff. And that's why we're bullish on Amazon. If you remember, I think you had me on earlier in the year, and Amazon and Meta were two of our top 5 picks entering the year. But as I said at the time, the reason I'm bullish is because of their retail business. Because the retail business has been losing money, and Amazon Web Services has been driving the growth. Now, if you look at the most recent quarter, the prior record for operating margins was 8.2%. I think it was in 2021. The most recent quarter they put up, they did about 10.7% operating margins, driven by their retail margins expanding. And now, why is that? Well, during COVID, they built out a lot of capacity because the only thing you could do was buy things online, right? You couldn't go into the store. Then, when we all got unlocked from our houses, we went out and did things. So e-commerce demand fell down quite a bit. And so then growth really slowed, but they had all of this capacity that they built up during COVID. And now they're starting to eat through that capacity. And as they do that, it's high fixed costs, these warehouses, et cetera. Now you get a lot of leverage across that. And so for me, the reason I like Amazon is I think EPS will at least double from calendar 23 to calendar 25, which other than NVIDIA is the fastest among any of the big tech companies. I think you still have a lot more leverage in the retail business as they get international, for example, more profitable. And as you pointed out, the ads on Amazon that they're showing in Prime, that's like 90% plus gross margins and 50% operating margins. So you layer that in, it's hugely profitable for them. And so that's how you have to think about Amazon. You have these other profitable revenue streams that are getting much more profitable revenue streams, by the way. They're getting layered into the model, and that's what makes it very, very compelling.
Ich weiß, dass die Übersetzung hier teilweise ein bisschen schwierig ist. Nicht vergessen, dass wir nach dem Stream hier im Subtitle, dass ihr das alles einschalten könnt, um dann nochmal nachzulesen, was der Niles hier genau erklärt. Letztendlich gesehen ist die Basis von Amazon wesentlich breiter aufgestellt. Mittlerweile es geht eben nicht nur um Amazon Web Services und die Profitabilität geht auf breiter Front bergauf, auch letztendlich gesehen im Kernbusiness, im E-Commerce-Business. Last but not least, Dan, and I don't want to take more time away, I know your time is limited, I would like to dive into NVIDIA in the AI universe. Of course, looking at the comments now, well, NVIDIA is not cheap. NVIDIA used to be cheap, but now the valuation is high. Those are the comments that I'm seeing right here. Probably the same comments we heard a year ago. NVIDIA is still out with earnings, and we had quite a few mixed earnings. ASML, also the bookings they had were disappointing. AMD earnings weren't bad, but they were not really raised in a substantial way. It feels like a lot of euphoria was already priced in. Supermicro ended up tanking after the earnings. What is your take on NVIDIA, and why do you still think NVIDIA is a cheap stock?
So let's think about the one massive investment cycle that we all know about, and that's the internet. So if you think about the start of the internet, maybe as when Netscape Navigator came out, the first real mass internet web browser. That was at the December of 1994. So Cisco was the one who helped build a lot of that infrastructure out. And so if you think about Cisco, in the first 15 months since Netscape Navigator came out, their revenues went up 2.5 times. Now, if you look at NVIDIA, you go, wow, over 15 months roughly since we heard about this new thing called generative AI and this company called OpenAI with ChatGPT, NVIDIA's revenues have gone from 6 billion to 24 billion. So you go, sorry, from 4 billion to 24 billion. So up sixfold. So you can go, wow, like that seems like an overspend. But if you think about it longer term, the internet bubble didn't really peak until you got into 2001. And Cisco during that time, the revenues then went up 16-fold, 15 and a half times to be exact. So you had a lot more growth in it. Now, it didn't mean that you didn't have corrections along with Cisco, big corrections along the way. It was down 26% in late 1995, 38% or something in 97, and 34% in 1998 from peak to trough. But the stock went up 4,000% from the end of 94 to its ultimate peak. Now, NVIDIA is up, but it's up 400 and something percent. And their revenues are up sixfold. So that's the way I would kind of put it from longer term perspective. If in the short term, do you think there could be a short-term spending digestion? You're absolutely going to get it. The question is the timing for that. But I don't think that's today. But by the end of the year, would I expect it after Blackwell comes out? Yes, I do think there will be a digestion phase where companies try to figure out, and we kind of talked about this, right? Microsoft, Google, Meta, they may be all spending a lot of money on AI, but at the end of the day, the revenue forecast relative to where the street was went down a little bit on all of them. And so at a certain point, are you getting return on that investment, or do you need a little bit of time to digest before you start the next investment phase?
Was mir bei Supermicro besonders aufgefallen ist, sind die deutlich gestiegenen Lagerbestände. Dan, the interesting part to me, looking at the Supermicro number, was the huge increase in inventory. What does that tell you? What does that tell you about NVIDIA? Since Supermicro and NVIDIA also sort of work together, Supermicro is using the NVIDIA GPUs.
Well, I mean, it's always perception of what is going on that matters. And so, let's say 4 or 5 months ago, if you tried to order an NVIDIA graphics chip, it would take you, 50 weeks or so, 40 to 50 weeks to get the chip. Now that's down to probably 10 weeks. So that means that supply is catching up with demand, which, by the way, is what AMD also said on their call, which is why the stock got clobbered. One of the reasons. So that's happening. The other thing is, well, if it's going to take you a year to get the chips, everybody on the planet is double, triple, and quadrupling ordering to get them. So that's going on. Now, here's where it gets tricky, is that if you want their latest chip coming out called Blackwell, which is much better than what they're currently selling, you can't afford to cancel your orders on the current chips. So my feeling is when Blackwell gets launched, people get the chips that they want, that's where you're more likely to see a digestion phase. Because right now, nobody wants to get out of line because they all want the latest and greatest chips. And so they're going to stay with their orders at least until they get their allocation of Blackwell chips. And then I think you're going to see some sort of digestion phase, which is when the problems will kick in. And that's what the market's trying to sniff out, right? And so you're 100% right. That's why Supermicro was able to get a lot of inventory, because the chips are now actually available. And that's why people are wrestling with this. But let's be clear, NVIDIA is not expensive. It's trading at 38 times. To put it in perspective, Cisco at its peak was trading at 160 times. And even NVIDIA relative to other semiconductor companies, there's a lot of other ones that actually have higher multiples because their revenues are depressed right now. So, and when we talked about Microsoft, right, 33 times, or you can talk about Apple trading at 28 times. They're growing much slower than NVIDIA growing at 100%. And this investment phase isn't over yet for AI by any stretch of the imagination.
Also in anderen Worten, die Bewertung im Vergleich zu anderen großen Tech-Werten ist bei Nvidia eigentlich vergleichsweise niedrig, wenn man das Wachstum von Nvidia mit berücksichtigt. Und ja, das Thema besseres Gleichgewicht zwischen Angebot und Nachfrage zeigt, dass die Verfügbarkeit dieser Grafikprozessoren sich bessert und letztendlich gesehen mittel- bis langfristig auch der Margendruck zunimmt. But now, when is the launch date of Blackwell approximately?
We haven't gotten an exact date. We just know it's in the second half, and so we're all waiting to see when that shows up.
All right, Dan, I really appreciate you taking time for this fantastic interview. We have great feedback, and I hope you're enjoying sunny Florida now. Quite a difference to Seattle, no?
Yeah, when you're getting an alligator warning in your neighborhood, you know you're not sitting in Seattle anymore.
Die Alligatoren im Garten. Wer mehr von Dan Niles lesen und wissen möchte, einfach auf www.danniles.com. Dort könnt ihr euch auch anmelden, bekommt dann regelmäßig Updates von ihm zu seinen Berichten. Und I really appreciate you taking the time, Dan. Best regards to your wonderful family, and we'll talk soon. Thank you very much.
Always my pleasure, Markus. Thank you.